Welcome to Traders of Money, the podcast where the secrets of trading success is unraveled one genius guest at a time. I'm Jordan Meller, your guide into the fascinating world of trading. Each episode, we dive deep with a seasoned trader to uncover their unique strategies, unforgettable trades, and the hard-earned wisdom that they've gathered along their journey. Today, I want to introduce you to a remarkable figure in the world of trading. Boris Friedman is renowned for becoming a funded copy trader / analyst at CoinW. With 7 years in the trading trenches, he began his journey during the 2017 crypto bull run and has experienced the highs and lows of the market, making him a treasure of knowledge and insight. So let's dive in and learn from the best. Welcome to Traders of Money, Boris. How are you doing?
I'm doing well. It's great to be here, and that's quite the intro. Thank you.
It is. It is. I want to put you on the pedestal just so we can bring you right back down throughout the rest of the interview. No, I'm only joking. I'm only joking. But you deserve it. You've been working closely with the TradeDelicious team for a little while now. I've had the privilege to know you a little bit better, so you deserve that intro. Let's jump straight in with a little bit of a fun question, which catches a few off guard that we do here at Traders of Money. Can you share an unexpected fact about yourself which the trading world might not know?
Oh my God. An unexpected fact about me that the trading world doesn't know. Well, I guess a fun fact about me, or I guess like one of the proudest accomplishments that I've done that's not really trading related, but like sports related, is that I've done the rim to rim to rim hike across the Grand Canyon, which was around a 49-mile hike, which in kilometers, that would be, let me use my brain here and my mathematical.
I'd take a swing in the 60s, maybe more.
70s.
78.8 kilometers. Yeah, wow.
Yeah, so it was a 78.8 kilometer hike. It was very challenging. A lot of people actually don't actually make it. I mean, not like a lot of people make it, but like some people don't make it. That's I guess an achievement that I'm very proud of accomplishing. So
Fantastic.
we did that hike with my very good friend a few years ago, and it took us over a day, no sleep. It was approximately 27 hours of straight walking up, walking down the canyon, then walking up, and there was about a 10,000 foot elevation change altogether. It's quite a crazy adventure. So yeah, I guess that's a fact that a lot of people would not know about me.
I mean, that takes a bit of discipline, persistence, energy. Like that's pretty hardcore.
Yeah, it took a lot of months of practicing or training rather. It's not something you can just read about it, or if you're listening to this right now and you're like, oh, that's so cool, I want to do that too, and you're gonna book your trip to Nevada, to the Grand Canyon. No, that's not how it works. You need like at least 6 months of preparation. That's what I did. It was 6 months of very intense cardio training. There's like a whole routine to do this sort of thing. It's like, yeah, it's crazy, and it takes a lot of preparation.
Wow. Well done. Has that helped your trading in any way, or your mindset approach? Do you ever resonate the two of doing that and the trading realm?
Yes. That's a great question, because there was that one point during the hike where you're at the bottom. No, you're at the top of the canyon or the bottom. Doesn't matter. Like, you have a long way to go to get to the other end, and you're thinking to yourself, how am I going to get to the other side? How? It's like there's no resources. We can't call like emergency rescue. I mean, we can, but it's going to bankrupt me, I guess. Well, no, I don't think you can't even call anybody. There's no like service at like the bottom of the canyon. So you're really out there by yourself or with the group of people that you're hiking with. And so that taught me, in a psychological sense, that it's really up to you to get out of this, to continue the journey. So I guess to make a comparison to trading is like, let's say you go on a very large losing streak or a losing slump, and you think, oh my God, I'm never gonna financially recover from this, as the infamous Tiger King would say. No, you can recover from anything. Anything is possible, and so yeah, I
It's
guess
up to you.
yeah, it's up to you. It's all in
Yeah.
your willpower and it's all in your psychology, really. Yeah.
I love it. I love it. So let's focus a little bit more on your trading journey then. And it was there an aha moment for you throughout trading? I know obviously you're a very prominent cryptocurrency trader. It's definitely your niche and it's where you operate. And getting involved in the 2017 bull run is going to have something to do with that as well. But was there a moment throughout your trading where it was just struggling, and there was just something that clicked? Was there any definitive moment like that throughout your journey, which really went, oh right, I can do this?
Yeah, I guess for me it was really just learning more about not necessarily a particular trading strategy, because there's so many out there that are, if you implement them correctly, they could work for you. But it's more about risk management. And one thing I didn't really click for me was the concept of keeping your risk low, just so you can survive another trading day, or live, just continue
Yeah.
thriving throughout your trading career. So when I first started, I didn't really have any concept of risk management. Like, my general rule now is to use 1 to 2% risk per trade, and having a certain exposure of my account exposed to the market. However, when I first started, I would just basically go all in with my full account size. So let's say I had a whatever $10,000 trading account, I would just go all in on every trade, because I thought that's just what you do. You like like why would you have like a certain amount of money in your trading account and only use like 1 or 2% of that? So and we're talking about crypto here, so I'd literally go all in on Bitcoin back in 2017, when it was even more volatile than it is today, and even today it is quite volatile. So you know that was kind of like a clicking point for me, understanding the concept of risk management, using proper position sizing. Like, position sizing is really the key, like how to determine your position size based on your stop loss, based on your account size, based on the amount of the percentage risk you're willing to lose per trade. Now, for me, that's about 1 to 2%. I know for others it can be about 5%. For others, it's up to 10%. It's really up to your own personal risk tolerance. For myself, it's 1 2%. I think that's a sweet spot. It's worked well for me, and that's that's what has continued working
Yeah.
for me throughout my trading career.
That still stresses me out. That's too high for me. But that's kind of your point, right? It's your point
Yeah.
of it's what works for you. So your kind of wake up call was when you started looking at longevity rather than profits, right? That idea of, well, I need to survive the market before I really turn money into money, and then that was the moment you realized how to truly trade.
Yeah, exactly. Because really, like, the point where that came to me was when I was trading, and I guess it was like 2019, and at that time Bitcoin was having a recovery. It was a crazy journey for Bitcoin. In 2017, it went from 3,000 to 20,000, and then in 2018 it ultimately went all the way down to like back to 3,000 basically. And then in 2019, it had like a pretty good rally from 3,000 up to 14,000. And I was lucky enough to, learn a little bit about like different trading methodologies, different trading strategies. And I opened up a trading account on the infamous BitMEX exchange, which is one of the first leveraged Bitcoin futures exchanges. And throughout that time in 2019, like really the first quarter, like the first half of the year, I was doing really well.
Mm.
But I was the risk I was taking was way too high. Like, I was literally going like pretty much all in, or not even all in, like, because there's like leverage involved. So I was going above all in.
Yeah, it's going to be high risk when you laugh at yourself as you're about to explain what you were doing.
Yeah.
But yeah, but we've all been there, right? And that's part of your learning curve. Was there ever like an unforgettable trade? Was there ever a trade that you'll never forget, win or loss, Is there ever a trade that you've got, whether it's a scar or whether it's a tattoo? Is there a trade that stands by you that you've taken?
Yeah, so just going just segueing into what I was talking about during that year in 2019 when I was going all in on every trade. I guess the biggest for me it was I really just remember like my losing trades a lot more than my winning trades,
Yeah, 'cause
because
they
that's
hurt
where
more.
that's where you learn your lessons and you learn how to like not trade like crap. So I remember there was this one day where throughout the whole month or the prior months I was doing pretty well. I was Bitcoin kept climbing up and up, and pretty much every time it broke a certain level or price structure, you could have just went long and probably made money like 70-80% of the time. However, there was this one particular day where essentially as I later found out, the trend was had been broken, and like the rally was done. And I kept doing the same thing I would do before, which was getting really aggressive on pullbacks or trying to go really heavy into breakout trade. However, that on that particular day, nothing worked. Like every pullback I was buying, I was getting stopped out on, and at the end of the day, I was down like 20% on my account in a matter of hours. So that really hurt. And I remember I was even I was still had a like a I guess a day job. You could call, I had a good job in
I guess
traditional
a lot
finance.
of traders call them real jobs. That's what I've noticed. Every time we're talking about it, it goes, yeah. I had a real job back then.
Look, trading is a real job, but
I agree. It's just the common terminology I've heard over the years is people refer to a 9 to 5 as a real job.
I mean, trading could be 9 to 5 or 9 to 4 or 9:30 to 4 if you're
Yeah.
trading the New York session. Like I'm I am lucky to live in New York, so
Yep.
I my hours are 9:30 to 4, but no, they're not, because I trade crypto, so my hours are about
24/7.
24/7, 365. Uh, I'm getting sidetracked here. What
Yeah.
what
So
was
you were down 20%.
Oh, right, yeah.
You're in a hole.
Yeah, and I remember I was just at my traditional finance job, not to call it a day job. And we had like some team meeting, and I was just sitting there, and I was like really depressed.
Yeah.
I was like not paying attention to anything. It was like a big like a group outing or activity, and I was just like, I just want to go home. I don't, I don't want
It's
to
a
be
kick in
here.
the guts.
Yeah.
When you make these big losses, it's a real kick in the guts, and it affects you more than like you think you could just put it to the side and carry on the next day. You can't. I know we've discussed my loss, but it took me 3 weeks to get back
Mhm.
to even wanting to trade again. Never mind getting past that. But it's a real kick in the guts. Let's transition a little bit about what you've learned over the years. And a question I always like to put forward is there a popular piece of advice out there that you see a lot of traders adhering to, or a lot of people in the industry saying, which you disagree with?
Yeah. So I guess one piece of advice that I commonly read or even hear about in different trading podcasts, or just going over different there's different like trading forums, different trading communities on pretty much everywhere now, on on Discord, on Twitter,
Mm,
on even more, I guess, more traditional like actual like bulletin boards, which you don't really have much these days. But what I hear commonly is use like I could hear like a particular trader saying, or read a trader saying, "Oh, I'm taking a trade here. I'm gonna use a very tight stop loss," which in my with my strategy, I don't understand the concept of using a tight stop loss. It makes no sense to me, especially like I'm reading like specifically like crypto trading uh communities, and they're saying, "Oh, I'm gonna buy Bitcoin here. I'm gonna buy Ethereum here, and I'm gonna use a very tight stop loss." which makes no sense because crypto is very volatile. Your stop losses should not be tight. They should be pretty wide or pretty loose, like mine are. My stop losses are, I give a lot of room for my trades to play out, give them some wiggle room because Bitcoin and Ethereum, they're pretty volatile. They can move like 3 to 4, 5% in a day, and then some of the altcoins can have up to double digit moves in a day. So the concept of using a tight stop loss just does not apply to crypto, in my opinion, or at least to my trading strategy. So that's, like, I guess, one pet peeve that really grinds my gears.
I
Yeah.
like there's a few different reasons a lot of people will push towards a tight stop loss, right? And it is a trap that a lot of beginners can get in, because if they think a tight stop loss, then I can use larger position sizes, which means my profit potential is much better, right? So people try to squeeze those in as much as possible, but it also does mean, like you're kind of getting at, that you have to pinpoint that entry on a market that we have no idea what it's going to do. You're telling me you're going to pinpoint an entry. Like, it's just not going to, it's not sustainable. And I think that's kind of your point coming across. But then also, yeah, I don't disagree with you. I know, and in my time, I've used tight stop losses before. Over years and years of more and more trading, my stop loss gets wider and wider and wider. My risk management kind of still remains there. I'm ready to get out if I need to be, but my actual stop loss just keeps getting wider and wider and wider, giving it room to breathe. So I appreciate you sharing that. So Boris is not a fan of tight stop losses.
No, and but I think our good friend Aaron might be a fan of tight stop losses.
I agree, and it works for him, right? It works for him.
Yeah.
But that's the beauty. So, talking on your strategy a little bit here, is there anything that you do in your strategy that you deem as unorthodox, that you potentially don't see as commonly? I mean, you trade almost every day with Aaron and I and Rich and the TradeDelicious team, and you're obviously a very prominent trader at CoinW as well. So you're surrounded by traders all the time. Is there something that you're doing that you see kind of unique to you, something a little bit unorthodox that you see a lot of the other traders doing?
Yeah, so I guess for myself, what the way I've evolved as a trader is that now I do open up quite a large amount of positions. So I have like right now, for example, I have probably up to 10 positions running, both long and to the short side. So really, the way I like to think of myself is that I'm almost like I'm running a long short crypto hedge fund, and I'm basically longing strength and shorting weakness. So I'm constantly hedged. Like I hate being to just having like just being 100% long, or
Exposed.
yeah, or
Yeah.
100% short, because yeah, so I don't like being like 100% in one direction. So I like to have a little bit of exposure to the other side. So for example, like right now, um, Bitcoin could be considered in a bullish kind of posture, and the overall market is bullish. So maybe what I'll be doing right now is I'll have like 70% long exposure, but I'll want to have like maybe 30% short exposure, just in the event that the market creates, the market has a downturn. I'll have those short positions to cover some of the losses of my long exposure. Um, and yeah, like I said, like I have like up to 10, sometimes even more positions running at the same time, which can be a lot to manage, especially in crypto. But I don't know, it does work for me. I don't know where I learned this from. It just kind of came to me.
That's that's
Yeah.
that's a testament to your financial knowledge. Okay. And that almost, that's streetwise when you're in finance, right? The fact that
Mhm.
you've structured your trading in a way, and you're sitting here telling me that right now I've got 70% exposure to the upside, 30% to the downside. Like, you're literally addressing it like you're a hedge fund. And so many traders fail to do that. They don't understand exposure, and I'm assuming you look at this in a way because you've probably been hurt from being too exposed to one side and not capitalizing. But even that 30% exposure to the downside that you have right now, you're evidently bullish because you're 70% exposure to the upside. But that 30% of the downside works as a stop loss. It does itself in that hedge that
Mhm.
if you do come to the downside, you're not going to 100% of your position is going to lose. You're going to have those short positions, while they might not equal to the whole losses that you'll feel from your upside exposure. They'll mitigate it. They'll mitigate
Yeah.
that loss, and that's how hedging works, and that's how you do it. It's a very intelligent way to do it. It's a very advanced way to do it, but I love it. I think it's something a lot of people need to adapt, especially if they're kind of swing trading
Mhm.
and moving, those positions around for a week, maybe 2 weeks. Mitigating that exposure is impressive. Well done.
Yeah, and it also works vice versa. So, for example, if I'm short biased, then I'll have just the opposite exposure. I'll have like 70% short exposure. Um, I'll also want to have some potential long exposure in case there's a short squeeze, which
Mm.
does happen quite a lot in crypto land, or just I guess and
In
even
crypto.
in equity. Yeah, in the equity world as well. We do have short squeezes, we have long squeezes. So
Mm.
I never want to be 100% directionally biased on one side. And I guess the other thing that I guess separates me or differentiates me from other traders, that I am more of a swing trader, so I do hold positions for um, a longer time frame. Now in
Yeah.
crypto, I hold positions for about 1 to 2 days. Now I know that's probably a very short holding time for you, because if I'm not
Yeah.
mistaken, you trade forex, so uh, that's probably like a short holding time for you. But in crypto, that's considered like I'm basically considered like a long-term investor by having a 1 to 2
for
day.
2 days.
I'm not joking. Yeah, I'm
Wow.
a long-term investor. I'm
Wow. There's a lot of
Warren
adrenaline
Buffett.
pumping
Yeah,
in crypto then, hey?
yeah,
Yeah, impressive. So look, the way you manage your exposure, the way you manage your risk, we learn these through experiences. 9 times out of 10, we can be taught by mentors, we can be taught by people, we can read books, but at the end of the day, the biggest lessons, like we've already addressed today, are the ones that hurt us, or the ones in which we feel so we're able to change and then react. So if we were to take Boris right the way back to the 2017 bull run. You've just been exposed to crypto. I'm assuming this FOMO all over the news has got you. Wow, I should look into this. If there's one thing you could tell yourself when you all the way back then, one piece of advice you could give yourself to Boris as he was getting involved in this industry, what would that be?
I suppose it just comes down to risk management. Um, Risk management, use proper position sizing, know what percent of your trading account is exposed to the market at any one point. And if the trade doesn't go your way, you already know like what percentage of your trading account you're going to lose, because that is something I didn't really like. I knew about the concept of,
Yeah.
okay, if this trade goes against me, I'll lose this much. But then when things just keep going your way and they keep going your way and you're very new to this space, eventually you kind of just forget about risk management. You're like, all right, like price just broke this level, time to put on a 20x leverage trade on Bitcoin and make some more money. And then, oh wait, price is going down, and I'm now down 20% of my account. What happened? Like,
So it's all about teaching yourself just to not all in. That would be
yeah,
your advice.
no, yeah, and like I have some close friends of mine who trade kind of as a hobby. They have a full-time day
Have a
job.
real job. Yeah.
Yeah, they have real jobs, unlike us degenerates. So, but the way they trade, they think they have to. Oh, they put in like 5 or 10,000 with their
Yeah.
broker, and they think they have to, on any one trade, they have to put all of their money into that position or on that trade, which is incorrect. Like, that's not that's not how
Yeah.
you do it. I mean,
Yeah.
everyone is different. Like, I'm not. You can do what you want in this crazy, I guess, in this crazy game of trading. But if you want to like survive long term, you really need to learn about the concept of proper risk management, proper position sizing, and uh, yeah, just risk management. I
Mm.
think that's the most important thing, because, like I said earlier, you can easily like Google or YouTube like a trading strategy that you can implement, and that will probably work for you if you do some research, some back testing. But if you don't have a risk management protocol, then all trading strategies are gonna fail you.
Yeah,
in my opinion.
Yeah. Okay. So we've looked at your past self. Now let's look a little bit into the future. And this is always a fun one. I want to know for 2024, we've just begun. I want a bold prediction out of you, Boris, right? 2024 is the year of what asset? What's a bold prediction? I've asked multiple people this question. Aaron came through and he was bearish, right? He was very bearish. He was saying Apple and Nvidia are going to come down. That was his prediction. For prediction over 2024, if you had to have a bold prediction on what this year is going to deliver, what would it be?
All right, so I'm gonna focus on MySpace here.
Yeah.
Not MySpace.
MySpace is not going to come back. That is a bold prediction. That is, yeah. Okay, but you're going to focus on crypto.
Yeah, I'm gonna focus. I'm gonna focus on crypto here. And so for those who live under a rock, the Bitcoin ETF was just approved. So it was approved in early January. In case people are listening to this in 5 years from now.
Yeah.
So the Bitcoin ETF was approved on the second week of January of 2024. So there's a lot of hype, there's a lot of euphoria surrounding, what's the next move for Bitcoin, what's going to happen with the overall crypto industry. I've heard a lot of analysts, a lot of even crypto hedge fund managers calling for very high price targets. Even Kathy Wood of ARK Innovation of the ARK funds, she's calling for like 150K Bitcoin, 200K Bitcoin in the next few years to come. Basically, all like the big, crypto proponents or Bitcoin proponents are all calling for some, pretty high targets for Bitcoin. So you know what? I'm gonna have to take a contrarian position and say Bitcoin isn't going to 100K yet. We just had this event happen. The Bitcoin ETF is, it's a big fundamental shift in crypto and the investing world. So now everyday people can have exposure to Bitcoin through an ETF. However, in previous big events for Bitcoin, for example, when we had the CME futures launch in 2017, that marked the cycle high for Bitcoin. When we had the Coinbase IPO in 2021, that marked a cycle top. When we had the Bitcoin futures ETF, which is different from the spot ETF launch later that year in 2020, in November of 2021, that actually marked the macro cycle top for Bitcoin. And afterwards, it just went down from 69,000 all the way down to 17,000. So I'm going to take a contrarian position here. I'm going to say, Bitcoin's not going to all-time highs. I'm going to say Bitcoin's going down to the lows of last year. It's going down to 20K. We're not ready. We're not ready to reach new all-time highs yet. Because if you actually take a look at previous market cycles across Bitcoin, it takes about 3 to 4 years on average for Bitcoin to, once it like reaches a new all-time high, for it to basically take out that new all-time high. So if you want to make a comparison, in December of 2017, Bitcoin went to 20,000, and then it didn't take out that high until December of 2020. So that took about 3 years. Now, our last macro cycle top was in November of 2021. And right now it's January of 2024. We still have almost a whole year to go before we reach that 3-year comparison. But now that Bitcoin has a lot larger market cap, it's going to take a lot of more firepower to actually move the price of Bitcoin. So I think this time is going to take maybe 4 or 5 years to see a new high. So I think we don't see a new high until at least 2025 or 2026 actually. So I'm going to take a contrarian position and predict that Bitcoin is going to have a pullback back to the levels of last year. And
it's logical, right? Because
yeah,
the more exposure and the more volume traded, it means the more power you need to really drive this up. And yeah, it's very logical. Look, we're running out of time, so I'm going to fire a quick round at you, right? A lightning round. All right, I'm going to ask you 3 questions, and I just want the quickest answer you can give me. You ready?
Okay.
Okay.
Let's go.
The one book every trader should read.
Trading in the Zone.
If you could have dinner with any financial mogul, dead or alive, who would it be?
I'm thinking. I forgot his name, but the CEO of Renaissance Technologies, one of the top quant hedge funds in the world.
Beautiful.
The name is slipping my mind, but the CEO of Renaissance Technologies.
Okay, beautiful. The biggest myth about trading that you would love to debunk?
The biggest myth about trading. The biggest myth about trading is that, from all the memes that I see online, is that trading is going to make you rich. You're going to be driving a Lambo if you become a trader, and that is a myth because I don't drive a Lambo. I drive like a 6-year-old Honda Civic, and it's a very reliable car. And I don't plan on ever driving a Lambo because that's just a stupid trade.
It's a silly investment. Yeah, I like it.
Yeah,
we're getting very common answers for that last little one about the myth. A final takeaway from you here, Boris. Right, nice and easy one. What's the single most important advice you would give to someone starting trading today?
So are they starting trading just like trading as a hobby,
They're
or
starting trading. They're brand new. They're starting today. What's the single most important piece of advice you could give them?
learn about risk management first and foremost before you dive into any kind of trading strategy, and learn about yourself, learn about your own psychology, because your psychology will reflect on your trading.
Beautiful. Beautiful, Boris. It's been an absolute pleasure. Thank you for joining us here on Traders of Money. Where can people find you more? Where can people get more information from you?
Yeah, I'm on Twitter. My handle is at Satoshi Boris. On Instagram too, Trader Boris. You can look me up. I mean, I'm all over the place. Just like Google me. I'm on CoinW, of course. You can look up my trading profile on CoinW. I'm one of the top traders over there. But yeah, all of my information is going to be on my Twitter and my Instagram. I have a link tree and all those. Yeah, I have all my information on those platforms.
Beautiful. And you missed the most important one. You're here on TradeDelicious.
I am. Yes.
What's going on? Right here. Everyone,
Yeah.
click the link, subscribe. You can find him right here in the live trading rooms and all the other content in which we produce. Boris, thank you so much for joining us. It was an absolute pleasure.
Yeah, likewise. Thank you for having me.